Joining us now, Evercore ISI's head of internet research, Mark Mahaney. Mark, you obviously just heard Steve. You know what they rolled out at the Made by Google event. Does it change your view on Alphabet at all?
No, I'm sorry, it doesn't. But there is the point I think that Steve was making, and I think correctly, is that the play here really is Gen AI, and whether Google is roadkill or whatever the opposite of roadkill is. And I think they're the opposite of roadkill. I think that's been the issue on the stock, and I think they're going to be able to prove that, in fact, they're one of the best beneficiaries, largest derivatives of the growth in Gen AI. I think you're seeing that in their search results. I think you're seeing that have been consistently double digit despite all of the focus on the rise of ChatGPT. I think you've seen that in YouTube, and you're certainly seeing it. And maybe the best physical manifestation of AI out there is probably not the smartphone; it's the car with Waymo. So look, we've had a big rally in Google stock. It's up 25% over the last couple of months, but valuation is still, I think, very attractive at 18, 19 times earnings. I think this thing will continue to re-rate. You also have a major catalyst, hopefully, coming up in the next week or two with the judge's decision on the future of Google. So that's where we're kind of on pins and needles waiting for.
Okay, waiting for that. Let's move on. You recently sort of swapped out your top pick to Expedia, replacing Uber. Is that just because Uber has done so well or some other reason?
Well, that's always part of it. The risk reward. Uber was our best idea at the beginning of the year when it's at 60 and the stock moves up, 50%. So, yeah, the margin becomes a little less attractive. I still like Uber as a long. I'm intrigued by what's happening at Expedia. So I think online travel, just as an investing space, is actually a really nice space for GARP investors or even value investors to step into. I mean, they generate, kind of solid high double-digit, maybe low double-digit revenue growth, nice margins, tons of free cash flow, dividends, share buybacks. I mean, it's really a great GARP value area to look at. But here's this company, Expedia, which trades at a material discount to the other two players, yet its growth rate has converged with that of the two leaders in the space, Airbnb and Booking. And I think it's a nice way to play the recovery that's sort of occurring now in U.S. Domestic leisure travel. It's new management here, both the CEO and the CFO, but I think they've been a trade up for the company that needed it. And I like Expedia here, 14 times earnings. I think this thing could re-rate, maybe to 18 times earnings, something like that, which is a lot of juice to the stock from here. So that's why we bumped it up. It's a number 3 pick.
Okay, and I'm looking at Snap, which is the parent company of Snapchat. It's down today. It seems like it's close to breaking below 7. I think, and somebody can at me if I'm wrong, I think this is an all-time low or just off it for Snapchat. They've still got a huge user base. The stock just keeps going down. What's wrong? It's below its IPO price. What's wrong with Snap?
No growth in their user base. So you're right. They've got a core user base, but it's been kind of sticking around at this, high 90s, 100 million in the US. And it probably doesn't rise from there. And then they've had a lot of innovation on the user side, but just not on the advertiser side. And I've forgotten the numbers off the top of my head, but they're doing like low single-digit percent, growth in ad revenue. That in an environment where you can do for, 10 times the size, you can get Google, which will give you 15%, close to 15% ad revenue growth, or for 8 times the size, you can go Meta, which is giving you 20% ad revenue growth. Like, where's Snap? Just lack of innovation on the advertiser side, no growth in their core user base, and I think that's a good.
So how does the
Snap.
Story get written then? Does Snap just continue to plow on like it is, or they've got a lot of users with a lot of data? I got to imagine there might be at some point value in some kind of takeout or takeover.
Possibly. They're also making a big pitch now, or a big bet, not too dissimilar from what you're just hearing from Google today on new Gen AI hardware devices. Now they're going with Snap Spectacles. It's the same thing that Zuckerberg is doing, by the way. He's making a big bet that the Gen AI, that the AI compute device that we're all going to carry around with us is not going to be our phones. It's going to be headsets. It's going to be eyeglasses. Sorry. And that's the pitch that Zuckerberg is making, and Evan Spiegel is making too. I'm not sure, and I think the market's sort of skeptical of that for good reasons, because that really would be a pretty big paradigm shift, if you will. And so it's hard to see what the option value is on Snap, but at the same time, they are generating positive free cash flow. If they can get a turn or two, if they can start much better offering much better ad solutions for marketers, there's a lot of upside opportunity here. It's just that I've been waiting for this for a couple of years. I haven't seen it yet. They have innovation, but I need to see it on the advertiser side. Until we see that, we can't. We're not recommending the stock.
Do you